Dear distinguished ladies and gentlemen, thank you for joining Blockcelerate webinar on blockchain for good. Today we are going to imagine and understand how we can facilitate the evolution of our future. We're going to imagine a world where the global population will have access to banking services, education, well-being, and economic opportunities, among others. This is the future is comprehensive in terms of human representation, irrespective of class, gender, or bias. Furthermore, it is also efficient and transparent, thus enabling new age of governance, global trade, and sustainable planet. We're going to imagine a world that we can effectively utilize through technology. Technology itself will be one of those toolkits that will enable this future. How we are going to do that, that's going to be the most challenging question. We have technology of today or tomorrow that we are going to utilize to facilitate these evolution. That being said, technologies such as AI, deep learning, blockchain, quantum computing, or even biological computing will be utilized to facilitate this future. Today, we are going to talk about how blockchain technology is essentially going to enable this future and how we think that it proposes the most comparable use case that we can utilize. Today, we have among us distinguished panelist, Mr. Michel Noel, who was the former head of World Bank Investment Funds and senior advisor to global funds at Blockcelerate. We also have among us Mr. Peter Jha, who is a member of the blockchain labs at World Bank. And at the same time, he was the first member to initiate the blockchain in bond registration. We also have Kate among us, who is our founder and CEO of Blockcelerate. That being said, I would pass the floor to Kate and Mr. Michel and Peter to introduce themselves.
Thank you very much, Irfan. Great to have everybody here join us. By means of introduction, I'm the CEO and founder of Blockcelerate VC, which is a global venture fund exclusively focused on blockchain technology. The way that I got involved in this space was sort of a little bit by accident, I think like most of us. But before starting Blockcelerate, I was working for a global market research firm called Partner, where I got to learn about and know some of the interesting use cases specifically related to land titles and registries, specifically with a country like Honduras. I was born and raised in Russia, so I still remember the 1998 financial crisis when all of my family's assets were devalued 30x within 12 months. So when I first came across blockchain and cryptocurrency, I thought it's an amazing opportunity for people around the world in countries, specifically developing countries and emerging markets, to hedge against their local currency. And here I am.
Hi, I am Michel Noel. I am former head of investment funds at the World Bank, currently working as a investment fund advisor and consultant and a senior advisor to Blockcelerate VC. It's a great pleasure to join this webinar. I came to blockchain through a recent experience, a mission to Niger, with my colleague Fatou Fadika from the World Bank. Niger, one of the poorest countries in the world, is situated in the Sahel region, a region that has been marked by conflict with refugees in the diaspora, with displaced persons inside countries. Also a region that is highly vulnerable to climate change and where climate mitigation and adaptation are very important dimensions. And And as we were there developing with the government and with the private sector a financial sector development strategy for Niger, we came to realize that blockchain could have a transformative role in the future development of Niger, from decentralized digital identity to registration and transactions of land assets for smallholders, to financial inclusions, payments, savings, borrowing, and critically also agricultural insurance, to participation of smallholders in more transparent supply chains. Really a big promise, and I'm really looking forward to our discussion today to share possible applications that could be deployed at scale in the poorest countries of the world and beyond. Thank you.
Thanks, Michelle. Hi, everyone. My name is Peter Zhou. I've been in the fintech for the past 15 years, managing and supporting the financial applications for the World Bank. Just for your information, that we borrow about $60 billion in the global capital market, and we process about $6 trillion worth of payments in the applications I support. So I fell in love with blockchain back in 2013 when I read the Bitcoin white paper, and fell into the rabbit hole since then. So about 2 years ago, I proposed and co-created the blockchain lab here at the World Bank, and have worked on many use cases such as land registry, cross-border payments, carbon market, central bank issued digital currency. And my most recent achievement was the blockchain-based bond issuance called Bondi. It's a world first, and we got lots of media coverage. I'm happy to be here with you all today, and I'm turning the mic to Kate now. Thanks.
Thank you very much. Thank you, Michelle. Thank you, Peter. So the agenda of today's webinar, we can move to the next slide, would include a few components. Obviously, the topic that we're here to discuss is 17 uses, but for the sake of time, we won't have time to dive into each one of them. So what we did instead is divided each one of those use cases across 5 different solutions: identity, land titles, and registries, financial inclusion payments, environments, and supply chain, which we're going to dive a little bit deeper into, as well as provide some of the country strategies for folks on the line. Before we jump into the use cases, we thought it would be worthwhile just to paint a big picture for you guys in terms of how we view the world and how we view blockchain in this world. So Irfan, you can move on to the next slide. So as investors, we always think about inflection points. And some of the important inflection points that we can think of is the Industrial Revolution about 100 years ago, which created enormous amount of wealth that came out of this. There were a few beneficiaries that took advantage of this inflection points, such as the Rockefellers, the Carnegies, the Vanderbilts, the JP Morgans of the world, an enormous amount of wealth that they built and collected. The sort of second inflection point, which happened about 70, 80 years later, is the creation of the internet. And as an outcome of that, we had another wave of disruptive companies that came about to take out the incumbents in the space. And those were, and still are, some of the largest valued companies in the world, such as Amazon, Microsoft, Apple, Google, Facebook. The difference between this first sort of inflection point and the second one is the wealth capture element of it. So if in the firm 1.0, if you will, majority of that wealth was retained by the creators, In the firm 2.0, the current firm, that value was more distributed, where the creators still captured majority of it, but then you had employees, you had venture funds that participated early, you had shareholders and stockholders who benefited from the growth of this ecosystem. So the way that we view blockchain is sort of this third inflection point that's going to create a new wave of firms 3.0. As we think about it. And the biggest difference between this new economy and the old one is the new one will be the economy of the 99%. It's not going to be just the economy of the 1%. Because now, with the fractionalization of assets, with the disintermediation of the middlemen, and potentially eliminated corruption and red tape, you have a wider population that can participate in this new economy. So the second note here is Moore's law. For those of you who don't know, Moore's law states that the number of transistors will double in the circuit every 2 years. In a nutshell, that means the proliferation of devices is going up, that technology adoption is happening faster than we can possibly imagine. So a lot of folks think, well, this technology is not quite ready yet. It's still early days. It's going to take years before mainstream adoption. In reality, it's happened way faster than we can anticipate. And the last bit here is personally our hypothesis here at Blockcelerate is that emerging markets in developing economies have a unique opportunity in time to leapfrog the innovations of the developed countries using blockchain. And for that reason, a lot of the focus, a lot of our deal flow, a lot of our companies that we're going to be investing into will be focused on emerging markets. But before diving into the use cases, maybe we should take a step back and Peter will give us a little bit of an overview of what blockchain actually is.
Thank you, Kate. So what is blockchain? So speaking of the exponential change, Kate mentioned about industrial revolution. So blockchain is among a number of technologies as part of the fourth industrial revolution. So let's move on to the next slide. I'm going to cover on the what blockchain is. By definition, a blockchain is a tamper-resistant shared digital ledger that records transactions in a public or a private peer-to-peer network. So it's a chain of blocks. And if we look at this diagram on the left, so it consists of participants like the user A, user B. Of course, in reality, you have a lot more. And in the middle, you have the ledger holders, we call them nodes. And every node keeps a complete copy of the data. And if you look, and the data are in the form of blocks are appended, as I want to focus, emphasize, appended to all the transactions using consensus algorithms. So it got a few characteristics. So first of all, it's secure because all transactions are signed cryptographically, and because it's append only, so only data can be added to the database. Changing or deleting what happened in the past is almost impossible. So therefore, it's secure and well suited for record keeping, such as managing record, processing transactions, tracing asset, even voting. So it's a share because every node, as I mentioned, has a complete copy of the data. So you provide great transparency out there. And it's also distributed because every node that runs the software has a complete copy of the data. So it's a resilient, thus censorship resistant. So a government cannot stop the information flow by doing anything there. So some people say that's a new way of democracy. So let's move on to the next slide. So people will ask, how do I determine that my use case it will be a good fit for blockchain? There are many models out there. And I'm sharing a simple version that's created by consensus. So basically, if you got to ask yourself 4 questions. 1, is there a obscurity challenge that you need more transparency in the process? 2nd, inefficiency. Do you need middlemen or many middlemen out there for the whole service? For example, our Bondi project, the bond issued on the blockchain, we were able to reduce the middleman from 10 to 12 down to just 1. So that's the efficiency gain out there. And 3rd, low trust, that you have to utilize a notary service somewhere or a trusted third party, that you have to use many other ways to enforce the trust, such as legal, such as audit, like all the banks that we not necessarily trust them, but because they're heavily regulated. So there are different ways to enforce the trust. But what if those services can be done using blockchain or a smart contract out there? So the last one is poor coordination. So many times the process could be manual, could be not optional, could be a repeated process. If you ever apply for a loan in many banks, every bank will do KYC or identity check on you. They will check your employment. But that process is repeated every time you talk to a new bank. So that process can be shared, or that information can be shared if we utilize the blockchain. So if you answer yes to one of the 4 questions there, then highly likely your use case will benefit from the blockchain technology. So next. So speaking of blockchain, we'll have to talk about Bitcoin and the cryptocurrency. Bitcoin is a cryptocurrency, and it's powered by the underlying technology called blockchain. So Bitcoin started about 10 years ago. I think that we're going to be the 10-year anniversary soon in January, as the Genesis block of Bitcoin was created in January 2009. And the Ethereum started about 4 years ago with a smart contract, which resulted as a boom of ICOs, or we call initial coin offerings. Today, there are over 2,000 cryptos out there. That's tracked by some website called coinmarketcap.com. So there are public blockchains, there are private blockchains, there are permissioned, there are permissionless. And they can all be used for social impact in the emerging markets. So I will stop here and ask Kate to talk about the next topic.
So let's dive into the specific use cases, since now we know what blockchain is. So number one, and one of the most important solutions that we both, I guess all of us agreed on, is the identity use case. The reason that identity use case is the most important one is because if we can solve problem of identity, we can achieve a number of sustainable development goals, from hunger reduction to good health to quality education, gender equality, and decent work and economic growth. A large amount of people around the world will not participate in the economy. So there's a few different problems with the status quo. Problem number one, and we can go to the next slide, is oftentimes there's no central authority to even issue a form of identity. Specifically, more than 1 billion people around the world don't have identity at all. Imagine the entire country of China or India. The entire population of that country does not have any form of identity. And if that's the case, they cannot participate in the formal economy. They can't get access to financial services, they can't open a bank, they can't get education, oftentimes they can't access a hospital, etc. Problem number two is that even if you do have a form of identity issued by the central authority, there's a number of challenges with it. Number one, in emerging markets, there's lack of trust in that third party issuing the authority, the identity. Number two, there's a massive amounts of redundancies from one agency to another, which creates a lot of inefficiencies and pains for people on the ground. And as an outcome of that, there's a lot of red tape, enormous amount of paperwork, and nothing gets done. Problem number three, which in our opinion is one of the most important problems with this, is even if you solve 1 and 2, there's no ownership of your own data. In other words, with the recent scandals such as Cambridge Analytica and Facebook, it became clear that population does not own the data. We don't have privacy of our data. We don't control our data. So within blockchain, there's a new emerging concept called self-sovereign identity. Self-sovereign identity means that you as an individual have full right to control, possess, change, monetize, do whatever you want with your data, rather than letting large enterprises such as Facebook or worse to take advantage of that. So our hypothesis here at Blockcelerate, as we're making investments, is that if email was the killer app for the internet, identity will be the killer app for the blockchain. We'll see if we're right about that. So we can move to the next slide. Here are just some examples of the vulnerable populations that this problem will be able to help address the problem of identity. The migrants, unbanked, large amounts of people around the world don't have access to financial services, and identity is the crucial stumbling block to that, specifically women. Actually, one of the core reasons women are not able to participate in financial services because women are much less likely than men to own and hold an identity in emerging markets, as well as labor, refugees, homeless, etc. So let's look at a couple specific examples here. So ID 2020 is an interesting consortium with a number of large enterprises such as Microsoft, Accenture, the Rockefeller Foundation, and others that came together with the goal to enable diverse stakeholders and agencies such as the United Nations, various governments, NGOs, to pursue a coordinated approach to identity. They have formulated a sort of a four-step approach. And number one is personal. The identity has to be unique to you and only you. Number two, it has to be persistent, which means that it lives with you from the life to death. Number three, it's portable. It's accessible anywhere you happen to be. And number four, it's private. Only you can give permission to use or view your data, which goes back to the notion of self-sovereign identity that I just mentioned. Another example of a wonderful company in the space that we've tracked is a company called EverID out of Singapore. They are leveraging biometrics such as facial recognition and fingerprints to create an immutable ledger that would track anybody's identity, and their goal is to migrate 7 billion people around the world onto their platform. And as a result of that, a number of use cases can come out of that, such as remittances, cash transfers, microfinance, improved medical records, et cetera, et cetera. Last example that I'll touch on here, which is more specific and industry specific, I guess, is a company called BlockCerts, which all they do is they are trying to create identity for certifications and accreditation. So in other words, it's a blockchain-based immutable record for academic credentials, professional certifications, workforce deployment, civic records. So no matter where you are, you don't have to go to a centralized agency to request your record of your certification. You have it, you possess it, and you can present it in any country in any region in the world. So now we can move on to the second solution, which is personally very near and dear to my heart, and that is land titles. As a matter of fact, one of the first ever use cases that I've come across, well, the most interesting use case that I've come across in the space was the country of Honduras, which some of you might know is extremely corrupt, was doing a POC with a company called Factom in 2013, 2014 or so, to migrate their land titles onto the blockchain. But I'll talk about that in a little bit, but here you can see that land titles, it's on, no, you can go back for a second, Irfan. On the surface, you can go back. On the surface, it seems like it's a very siloed problem, but in reality, it actually touches a lot of people's lives. So there's a famous economist by the name of Hernando de Soto, who coined the term dead capital. Dead capital, he said, is assets such as lands that are out there, but not claimed for, not accounted for. And he equated dead capital to be about $20 trillion worth of value to the economy. So $20 trillion worth of loss to the economy that could be there otherwise if we found a way to account and track that land. And as a result, you can see here that it touches goals such as poverty reduction, hunger, even gender equality, decent work, economic growth, infrastructure, sustainable cities and communities, et cetera, et cetera, et cetera. So you can go to the next slide. The biggest challenge, and the reason this is such a good use case for blockchain, is because blockchain is best suited for use cases where trust is missing. And when you talk about land management, and when you talk about emerging markets, and you talk about third parties such as governments that control massive amounts of records, you're talking about a potential jeopardized trust where blockchain can come as a solution. I'll give you an example. Irfan here, who is the kind moderator for us, was born and raised in Bangladesh. Irfan, you can chime in if you want, but I found it a very fascinating story that once somebody actually tried to come and sell him his own land. Is that correct, Irfan? Do you want to chime in here?
Yes, Kate. And I think absolutely, I see the potential implication of blockchain in land title registration. It's because the fundamental problem lies in the administrative process as to how current land titles are done. In a lot of cases, you have corrupt officials, and you can actually get the same document from the same source of origination, and have that. So, which essentially, that's exactly what happened. So there was this one time that I was looking for a new place, and some dealer came to me and said that, there is a land that's up for sale. And so he shows me a piece of land, and, so I looked through it, and I realized that, this sounds very familiar. And then, only for me to find out that that's my own property that's being sold. So this is the case in case. And that's just, the tip of the iceberg. There's so much more than that. You have people, grabbing land, and you don't have, actual documentation to prove that somebody has taken or seized your land. So I see a lot of use cases when you are able to coin blockchain and land title. Thanks, Kate.
Right. Absolutely. Nutshell, you have somebody's brother-in-law who's friends with somebody in the government, comes in, changes the record forever, and there's no way that you, with a piece of paper, are going to stand a chance against a corrupt official with a centralized authority. And blockchain changes that because it creates the transparent visibility. It's not that you can't change the record. You can still change the record if you really want to, but you can't do it without everybody else in the network noticing. And that is the biggest advantage that blockchain provides. So we can go to the next slide. The company that actually had the most success in this use case is a company called Bitfury. I just read in the news they're at about $1 billion valuation, I believe, lately, which is a sign of their strength. But they have implemented a successful use case migrating centralized land titles in Georgia to a decentralized database. They had success in getting buy-in from the government to take the centralized system and migrate it into this decentralized one, and that's been now happening for the last couple of years. They have more than 100,000 records already on this decentralized ledger, and they're still working on growing that number. So with that said, I think we can move on to the next use case. Peter, I think you're muted.
Okay.
Hear
me now?
There you go.
Hello? Are we good?
Yep, we can hear you.
Okay. So the goal of financial inclusion is to enable individuals and businesses to have access to useful and affordable financial products and services. So that includes banking, loans, and insurances, etc. It touches so many parts of our life. So if you look at the SDG goals out of 17, 7 are touched. So let's move on to the next slide. Access to bank, like having to loans, like a credit card, it's like to many of us, it's like a breathing air. It's everywhere. It's available. We take it for granted, but for many parts of the world, it's not. Out of the World Bank does this study to track the people unbanked. Unbanked means people don't have an account at a financial institution, and they're adults. So out of the adult population, we still have 1.7 billion people unbanked. And underbanked, that means you do not have enough access, often because the banks charge heavy fees or they have a high deposit requirement. So because of that, people without access to finance will get stuck in the poverty cycle. So there are 4 different categories or causes, such as income volatility, that banks will not be able to service because they have a minimum deposit requirement. And if people live in the rural area, they may not have an office close by, so they won't be able to have access. And there's mistrust. There in certain countries, because of the government, because of the banking system, people will fear that their deposit will be lost, so they will not use the bank. And there's the inaction that commercial banks make their service available, not available to the poor because they're not profitable. So let's move on to the next. So talking about banking or access to banking, there is a payment system that's powering all the systems there. The current payment system has been there over, well, I guess, decades or 50, 60 years. And it's built in a way that the payments are sent in batches, like more like a relay. This is especially in the case of cross-border payments or remittance. So imagine if you send a payment from the US to Philippines, it travels one or multiple banks in the US, and then it gets converted by doing a exchange, currency exchange, and sent to Philippines. That gets passed on to one or two banks before it reach the end. And it usually costs 3 to 5 days. And costs, if you do a wire today, like cost you $25 to $45 to wire the money, even though you're sending only $50. So imagine the immigrants that they do monthly remittance back to their home country. So let's move on to the next. So there are many, many challenges. Well, in certain people's, in many people's view, those challenges will be the opportunities. So we encourage a lot of the startups in the fintech field to utilize or to the potential of blockchain powered payment systems, payment solutions, or rails for that. At the World Bank, actually, we have two goals with the financial inclusion use case. One is to be able to provide traceability and transparency to the donations and humanitarian aid. The second is we work with the client countries to set up their national payment infrastructure. So while encourage market competition, we help them to reduce the cost of transaction by deploying efficient and secure payment solutions there. And there are also many startups out there. So here are a few. EverRex is a payment wallet remittances solution. They also do micro lending as well. So it's a startup started in Asia. Cora is a player in Africa providing payment solutions. Humanic is a digital banking and exchange. What they did well is integrate very well with the identity management solution using biometric technology. BankQ and Change, they are similar, also payment systems out there. And the last one, IBISA, is the insurance, micro insurance provider in the agriculture space, mainly for the farmers. So I'm going to stop here and let Michelle to talk about the next topic.
Thank you very much, Peter. So the next solution area is environment. Environment touches upon climate change related sustainable development goals, both in terms of mitigation and adaptation. So from climate action to life below water and on land, and also critically water. And of course, all being related in the end to poverty reduction, because the failure actually to limit the global rise in temperatures to below 2 degrees and preferably 1.5 centigrades would probably be the single most damaging thing one could do against the effort to eradicate poverty in the next century. So moving to the next slide, blockchain has been used in a number of sectors in the environment space, in renewable energy by deploying renewable crypto currencies and transparent funding platforms for renewable energy startups. in recycling, through incentivizing good behavior through crypto economy circuits. Conservation, also conservation databases to ensure immutability and openness of databases for scientific evidence. Waste management, interesting experiments of tagging and following toxic waste across borders in a reliable and decentralized way. And last but not least, carbon offsets, basically by the development of decentralized marketplaces for the trading of CO2 emissions credits. Moving to the next slide and focusing on carbon trading market, it's very important to realize that in the existing system under the Kyoto Protocol, a number of regions of the world in the EU, in the US, in other markets, in China, have been developing region-specific carbon trading markets based each on its own centralized registry. Those systems, by and large, are very heavy, they are cumbersome, and in a way, very inefficient. And also, critically, they are not related to each other. And the promise that blockchain brings to this space is that on the one hand, if these systems moved to the blockchain, one could begin to interconnect them so that instead of being able to trade within a given sub-region, one could also trade carbon rights across regions. And secondly, also, and critically, under the Paris Agreement, Chapter 6, countries are committed to develop carbon trading markets, but it is clear to us that in the vast majority of emerging markets and developing countries, they do not have the resources to develop this market based on legacy systems. One needs systems that are decentralized, efficient, allow for the easy digitalization of climate assets, support transparent transactions, and support transparent reporting of these transactions. And that's where blockchain, in our view, can make a tremendous difference towards the achievement of the global target agreed under the Paris Agreement. And if we move to the next slide, we'll see that there are already a few very interesting experiments that are starting. For example, Nori is developing the first marketplace for carbon removal on the blockchain. And through this platform, corporations, businesses, governments, utilities can buy carbon removal certificates, and these certificates can be certified on the blockchain. An interesting company as well is Expansive, which is really developing cutting-edge systems to digitalize various climate assets, and in particular by embedding in the digital signature of these assets the CO2 removal capacity of these assets, which is very important because one needs at the end to have a common unit in which one measures CO2 removal if one is to be able to trade it, both within existing regional CO2 markets and tomorrow across these markets. So we move now to the next slide, and the next use case, which is the domain of supply chains, which is linked with quite a number of sustainable development goals, from poverty reduction to health, gender equality, economic growth, and reduced inequalities. Moving to the next slide, it is clear that supply chains can be transformed in a fundamental way by the application of blockchain technology. Blockchain technology can provide proof of ownership. It can trace the movement of the asset through the blockchain, through the supply chain, and ensure traceability from the original producer to the end user. It can improve inventory management by preventing a situation of rupture of inventory or overstocking situations. It can reduce paperwork and administrative errors throughout the supply chain. And in the end, it can increase transparency because if you buy a unit of a certain product as a final consumer, the blockchain gives for the first time the capacity to trace where this product is coming from down to a very disaggregated level. For example, if it is an agricultural product, down to the smallholder farmer that has produced it. So if we go to the next slide, we see the challenge, the objective, and the benefit of moving supply chains to the blockchain. And this can be seen in moving to the next slide. This can be seen in a few very illustrative cases. Some of them are even beyond the list that we have here. Now I would like to mention two of them. The World Wildlife Fund is currently partnering with Consensus in the Pacific Islands to develop a transparent supply chain for tuna from the original fishermen through innovative radio frequency identification techniques for e-tagging and scanning of the fish. And at the level of the consumer, this can be done through an app that can be used to scan the fish being bought and allowing immediate recognition of the origin of this fish. And that can be, this system can be used to ensure that fish is caught in a sustainable way. And that's one of the great benefits of transparency from one end of the supply chain to the other. Another quite interesting experiment that is being developed and also gives quite an interesting illustration of the power of blockchain is the mining of cobalt by industrial mines, by artisanal mines in the Democratic Republic of the Congo. In many of these mines, there is the use of child labor living in slavery-type conditions. And the whole point that is being addressed here by this approach that is supported by Amnesty International and others is to try to develop a system where one can trace the origin of the cobalt and trace its evolution throughout the supply chain in order to avoid and reduce and hopefully eliminate the use of artisanal mines which are violating basic human rights. And this approach, in our view, holds a lot of promise for the responsible and sustainable mining of this material, which finds its way into all the lithium-ion batteries that we use every day in our devices. And if we want to move to the next slide beyond these examples, to conclude this presentation, I think it would be good to think 1 minute about how to go about deploying these very powerful applications in a country context, even in the poorest countries of the world, like Niger, which I mentioned in my introduction. We believe that there are three priority things that we can do. The first one is to create and animate a country blockchain development stakeholder group, which would include government, regulators, financial sector entities, households representatives, enterprise representatives. And this stakeholder group would try to identify, in the context of the country, in the context of the region, what are the most important applications that could make a significant change in the life of the population and in the life of the poor. It can be in decentralized digital identity, it can be in land and housing registries, the space of financial inclusions, from payments to savings to loans to index insurance in agriculture, the clarification and transparency of supply chains, and the various actions that the country can take in the area of climate mitigation and adaptation. And once those key priorities are identified, then the third priority in our view is to deploy the power of investment funds to make these applications real. First, at the startup stage, through the deployment of the support by offshore and onshore venture funds, to ensure that we have a proof of concept and that we have a deployment of these applications as pilots. And then when the pilots are successful, when they are shown to work in the precise setting of the country, then support the scale-up at the national or the sub-regional level. Coming back to the case of Niger, scale up across the population, scale up across the region of the Sahel, for example, of the most promising applications where, in our view, the strategic investment funds that are rapidly developing and being implemented by a growing number of developing countries and emerging markets can play a big role in funding and mobilizing the private sector resources to fund the scaling up of these applications. So back to you, Irfan.
Thank you, Mr. Michel. And by that said, I want to thank you all for joining us and the panelists for giving us an overview on the utilization of blockchain for good. We understand this technology is in its very early stage and requires your collaboration to achieve its full potential. That being said, blockchain does present us with a compelling case to facilitate part of that future that we are trying to construct and what the UN Sustainable Development Goal is trying to achieve. While blockchain can facilitate enablement of the future, we see that it cannot alone solve every problem out there. It is, at the end of the day, part of the toolkit that we have that we can utilize to create a future. That being said, we'd love to hear your thoughts, questions, and suggestions in regards to this webinar. You can always send us an email at info@blockcelerate.vc. And besides that, there is a small chat box over here, and you can always put your questions around there. And you can also speak through the microphone as long as you mention in the chat box whoever is trying to ask the question. By that, looking forward to hear from you. Thank you all.
I saw there's a question from James Ruffer. Ask about, do you have any exchanges that could move money from Caribbean, Latin America to the USA? I believe there are many type of solutions there. There are fiat to crypto and back to fiat route, and there are even at the commercial banks that they enable a payment rails to able to move money. There are also like certain central banks, they start to issue digital currency to help this move. So back to Caribbean, Latin America, I believe there are, for the first category, I think there are companies like Ripple, IBM Universal Payments. They all enable rails for the banks to use. I'm not sure whether they're directed to the individuals. Of course, I think there might be startups. I do not have any in my mind. And second category, I think we also covered just now. And there's also a company called BIT. I think it works in the Caribbean area to do central bank issued digital currency. That's going to help as well. And I think if we talk about South America, there are many exchanges that support fiat to crypto, and then in crypto to the US route.
Thanks, Peter, for giving that explanation. James, you're live, so you can also speak through the microphones. You're unmuted, if that answered your question.
Yes, thank you so much, Peter. One of the things that we are constantly looking for is more cost-effective ways of implementing blockchain technologies, and we see the Caribbean and Latin America and other countries having a minimum fee of what us in the United States would consider, 3 to 5 cents to move, or even free to move money from account to account, to where in these other countries it's a minimum of $12 to $29. So, Costa Rica is one that we've been just as an example of trying to find a way to convince, either the commercial banks or the banking community to allow, us to get rid of SWIFT or ACH rails. So I was just kind of curious of your thoughts of how that's coming, or how to convince those banks to allow us to use the rails instead of traditional banking.
Yeah, that's a very good point. I think the World Bank also has a report, or we do research every year on the fees that how much it takes for a migrant to send money across the globe. So I think Caribbean regions are among the highest. And yes, because there are, I think I will answer it in the two ways. One is the regulation that's related to de-risking, and the banks that has to follow AML, CFT rules. So it's kind of hard one way. Secondly, I think the solutions out there, even today, Ripple, IBM, Stellar, plus numerous startups, they are creating different rails out there. And if there's none right now, I'm sure there are probably a few target individuals. But if not, I think you could consider that as opportunities for you to explore in that space.
Thank you.
Thanks, Peter. That being said, we have another question from Evel from OPIC. Can you guys see the question? The question is, they want to know about if there are any platforms under development to streamline microfinance risk transfer. Yeah. Peter, you want to take?
I'm not sure whether I understand the question. Microfinance and the risk transfer.
Avel, you're unmuted. Maybe you're live.
Yeah.
Hello?
Maybe Noel or Michelle, you could have some insight here.
Well, the application that comes to mind in terms of risk transfer is, of course, the whole domain of micro insurance. I suppose this is what is being referred to here when one talks about risk transfer. Now, for micro insurance, the there was in our presentation by Peter,
Yeah.
there was one example of
Yeah, Ibiza.
yeah, this is a very good example of what can be done, because in the sphere of agricultural insurance, which is absolutely critical, especially in a world where the incidence of climate-linked disasters is increasing both in frequency and in intensity. It is critical to ensure that smallholder farmers, poor farmers across developing countries have access to agricultural micro-insurance. And there are two key techniques in our view to do that. The first one, of course, is to rely on index micro-insurance, physical systems that require physical certification of damage by an individual are much too expensive and cannot possibly be deployed to satisfy the needs of the poorest. So one has to move to index insurance, including satellite-based index insurance. And once you have made that move, then comes in blockchain, because one could implement a micro insurance scheme based on blockchain, where you have achieved maximum efficiency in terms of processing a claim by the system based on remote sensing, and payment of the claim directly to the account of the poor farmer, and access of this payment through his digital identity. So it is, in our view, a perfect space for doing that. And the example shared by Peter is a very good example, which, in our view, has the potential to be scaled up on a massive scale.
Thanks, Michel. I think there's a couple more questions from James, and also I think Avel sent just an add-on. Can you guys see it?
Yeah,
So
I'm reading it. So James' message was about she was sharing about they stop attempt to convince companies to go full on blockchain and attempt on the hybrid approach. I think I am in line with you from our perspective. I think overall, if there are public blockchains that everything is going the full decentralized way, talking about identity, talking about on-chain and off-chain storage, and etc. But there's also a rapid development in the enterprise blockchain space that the companies start to take not a disruptive way, but more a adaptive way to blockchain. So you may still have an application with blockchain, but that's only for the ledger. And there are many components. First of all, you are not getting the permissionless approach. So everyone still is permission to join. And the identity management still can fall back to the traditional way. Your off-chain storage could, or many other transactions can still happen in your legacy system, but you just store a reference on the blockchain. Hopefully this answers your question.
There's some more question. I guess Michel, Peter, or even myself, I could take one. So
please go ahead.
So I think there is one more question from, I think that was the add-on from Avel. So maybe Michel, you want to take that?
Can you state the question or the follow-up, please?
I think he's saying that a scenario, he's giving us a scenario. A DFI offers to a microfinance institution a portfolio risk guarantee, or alternatively crowdsource funding of microfinance risk taking. A blockchain application could streamline fund transfer, exposure reporting, invoicing, etc. I don't know if that is a question or a suggestion.
It seems more like a suggestion, certainly an excellent suggestion that could be further investigated and piloted and tried with a few specific DFIs, in my view.
So I think Chris, he has a question. He's really interested in stopping data and digital colonialism in EM, especially when it comes to EMR and medical data recorded by wearables and apps. Many projects focusing on this Western world, but don't know many in emerging market, and combining it with SSI to be able to make it universal. Anyone wants to take that? Like, if there is a, so Chris, I'm trying to understand, is your question if there are any blockchain project that is dealing with data privacy on wearables in the emerging market?
No, if you want, I can jump in voice, if that's
okay. Sure. Yeah.
And it's Shay, Chris's feminine name in European countries.
Okay.
Just really quickly, I'm really I lived in Kenya, I lived in Nairobi, and I saw how a lot of companies were being funded not upon the services they were providing, okay, but on their capacity to gather data. That's what I call new data colonialism or data plundering. Basically, we have startups, for example, in Nairobi who were funded with $2 million just out of selling pads, pads, tampons. That's obviously not how you're not going to recover your funding with that. You are your funding is based upon your capacity to gather data. And I see like this is not a fair change because these institutions are not giving anything back. Okay, so I think blockchain can be a way so people can take control over their data, especially EMR. Data in emerging economies is a new commodity. Like when we think about data in emerging economies, we think, oh, maybe it's not that valuable because it's not in the Western world. On the opposite, this data is more valuable than anything in the US and Europe because we don't know anything about these markets, and 60% of business are going to make their profit in the next following years in emerging economies. So I think this is a really like big moment where blockchain could make a difference and could stop this new digital colonialism. Because if we think about it, if we break down the barriers when it comes to income, when it comes to access to healthcare through blockchain, we're like bringing down one of the barriers that separates emerging economies with the developed world. So I'm looking into, I'm researching about this, I wrote papers about this, but I don't know who is working on this. So I don't know, like just basically put this out there, think about the importance of this, and I don't know, just like if you know of anyone, or I don't know, just like throw it out there.
If I may comment on this, I think thank you so much, Chris, for this for your presentation. I think that it would be very good if you could share, if it's okay with you, with us some of the papers you have written on this topic, because I think it speaks very profoundly to the killer app of blockchain that Kate has identified in her initial use case presentation, and it takes us back to the number one application, which is basically decentralized digital identity, where the revolution is that through the system you are now controlling the information that you give out, and down the line you can monetize it. In other words, there is no reason for these new data organization to capture the value added, the tremendous value added of this data for themselves without sharing the profit of this data with the people who have produced them. And blockchain actually reverses the power balance by giving to the individual the power to reveal or not reveal a certain data about herself, himself, and down the line, also the power to monetize the release of this data. In other words, you could say, okay, this data is private, but if it has to be released to company X or Y or Z, it has to be done through a transaction that has a value for the person who has generated the data. And this transaction then is transacted in a reliable and secure way on the blockchain. So I think that you have put the emphasis on something which is absolutely critical and transformative, especially in emerging markets and developing countries where, as you say, people think that this data have no value. This is not true at all. This is probably where they have the most value. And we would be very happy to look at some of the papers you may want to share, and then begin a dialogue with you about where these kind of ideas could be actually implemented, whether it is in Kenya or in broader African regions and beyond.
Absolutely. I know we were very this in time, but I think we can establish adult relationships, we can change the paradigm about data, In my article, I mentioned an example that someone gave me, data is being like guano. I don't know if you're familiar with guano, but guano was one of the biggest commodities in the 19th century. Guano is basically bird excrements, bird shit, excuse my language, that was used as a fuel, And right now people are creating data. We are creating data, but we are not taking advantage of it, So we need to change this paradigm. We need to claim our data ownership, and especially in emerging economies. This is so important because it could help break down some of the barriers that separate emerging economy with the Western world, and not even only in emerging economies. If we think because a lot of people, when it comes to data and blockchain, we're looking into ICOs and how to money. No. You don't have to do this. You don't even have to go so far. The data in itself is a commodity. You don't need to maybe sell your data against tokens or something. What about if you could change your data for your next woman checkup or your next blood count? So we need to change our mentality. Data is not about I'm going to sell my data. No. Data is in itself a commodity, and you can exchange it for other services, apart from controlling its privacy. But I think when we look into data, also it's really important to think about universal. We talked about identity, we talked about data, but the only way this is going to be universal is if we look at systems. I don't know if you guys know about sovereign. We need to look into companies that are just like with the internet, we have DNS, we have other systems that are universal. We need to look into systems that make it possible for us to first own our identity, so we can then claim our data ownership. Sorry, I talk a lot. I share my article in the channel.
Thanks, Chris. Thank you for that information. And again, like I said, there are multiple scenarios and use cases when it comes to either data incentivizing model, or when the infrastructure is lacking, how you could utilize that data to give more opportunities in that space, especially in combination with other technologies such as big data analytics. And at the same time, we're looking at a future of healthcare also, so clinical research through data sharing that we haven't been able to achieve, and it will open up that scope. Again, thank you so much for your points. And that being said, if there are any other questions from anyone, I think James had a question. Or
no, I was just commenting on Chris's elegantly.
Okay. All right. Thanks. Any other questions from everyone? I think that that's pretty much about it. So, well, again, thank you so much for joining this session, and we're glad that some of you were able to ask us some of those questions. And again, like we said, this is the very early stage of the industry itself. It's just, again, tip of the iceberg. There's so much more that can happen with the combination of the Moore's law itself. We're going to see a whole different world altogether. Again, thank you so much. Thank you, Peter and Michelle, for joining this call. And we'll be in touch. And please feel free to shoot us an email. Thank you.
Thank you all.
Bye-bye.
Bye.
Bye.